Good evening. It's my privilege again to be with you and share the update on Reliance's performance in the last quarter. This also has been a quarter of several records and an outstanding performance. In terms of numbers, our revenue this quarter was 1,41,700 crores, up nearly 56% year on year. Our segment EBITDA for this quarter was over 21,000 crores, up 51% year on year, and we had the highest ever consolidated net profit of 9,459 crores, up 18% year on year. Our consumer businesses continue their strong growth and now account for over 21% of consolidated EBITDA. As we look back over this quarter, the three pillars of earnings growth in this quarter were Petrochemicals, Jio, our digital services business, and retail. Let me start with Petrochemicals. In Petrochemicals, in this quarter, we had an EBITDA of over 9,200 crores, up 82% year on year. This was on the back of production of 9.2 million tons, up 33% year on year. So clearly, we had a very strong volume growth coming on the back of the commissioned projects. But equally importantly, we had margin growth, and EBITDA margin at 22.9% was up nearly 300 basis points year on year. Clearly, we are seeing the benefit of new projects. We are seeing the benefit of bringing projects at the right time in the cycle, and we are seeing the flexibility in feedstock across our portfolio of cracking, and in this quarter we benefited from light feed cracking. Our refining business, another very satisfactory quarter with GRM at $10.5 per barrel, slightly lower than the previous quarter. Still a very strong outperformance relative to Singapore complex. This quarter was marked by slightly soft light distillate cracks, stable middle distillate cracks, and strong solids prices. Our retail outlets continued to see strong traction, and our volume of gasoline is over 25% higher than last year. In our upstream business, we saw higher revenues and higher EBITDA coming primarily out of higher oil prices. We have now started work on the project to monetize KG-D6 gas resources, and our CBM production stayed steady at 1 million cubic meters per day. Jio had another outstanding quarter. I'll talk about that in more detail later. But our subscriber base as of June 30th was in excess of 215 million. We have probably the highest customer engagement in the industry at about 5 hours every day. We carry 76% of all the 4G data traffic in India, and we probably have the highest ARPU in the industry, which is just about rupees 135 per month. Our retail business continues its hyper growth trajectory. Turnover of nearly 25,900 crores in this quarter, 2.2 times what we saw last year. Record EBITDA of over 1,200 crores, over 3 times what we saw a year ago. We are growing while keeping EBITDA margin constant or expanding. And in our retail business, we truly have unparalleled retail presence with over 8,500 stores, presence across more than 5,200 towns and cities, and over 18.6 million square feet of store space. Let's look at the financials now. Revenue in this quarter consolidated was 1,41,700 crores, up 9.7% quarter on quarter. PBDIT at 22,450 crores, up 8.6%. The revenue growth clearly came from higher oil prices as well as higher volumes out of our petrochemicals business and the revenues from our consumer businesses, both retail as well as digital services. Higher EBITDA is a function of better margins in our petrochemical business as well as increased contribution again from our consumer business. Our depreciation charge was 6.6% higher at 5,173 crores with the commissioning of new projects. Interest costs at 3,550 crores were 38% higher than the previous quarter, again because of commissioning of new projects, and net profit was 9,459 crores. Return on capital employed has been improving quarter after quarter for the last 8 quarters, and consolidated return on capital employed for this quarter was 13.3%, and standalone return on capital employed adjusted for CWIP was in excess of 25%. When we look at the EBITDA across all our businesses, the top 3 contributors in this quarter were Petrochemicals at 9,211 crores, contributing 44% of consolidated EBITDA. Refining at 6,131 crores, contributing 29% of EBITDA. And digital services at 3,171%, contributing 15% of our consolidated EBITDA. Let me now talk about each of our businesses in a little more detail. In refining, as I said, EBITDA at 6,131 crores, GRM at $10.50 per barrel compared to $11 per barrel in the previous quarter. Slight softness in the markets led primarily by gasoline. On the other hand, as far as crude sourcing was concerned, Arab light heavy differentials were slightly wider. Brent Dubai was roughly the same. The slight weakness that we saw in gasoline is a function of higher inventories across the globe and some exports out of China coming out of low growth there. As far as the macro is concerned, we continue to see 2018 being targeted at 1.4 million barrels of oil demand growth, with predictions of similar growth in transportation fuels as we saw last year. The growth in emerging markets, non-OECD countries dominate the transportation fuels. As far as diesel is concerned, we saw stable margins, roughly $15 a barrel both in this quarter and the previous quarter. Diesel demand continues to be strong across all regions, and diesel stocks are relatively low at the key trading centers. Crude markets are getting tighter as we see, with increasing prices quarter after quarter, and inventories across the globe are among the lowest levels that we have seen in the past 3 years. The good news is that India has among the highest growth rates globally in terms of demand for transportation fuels. Gasoline demand was up 8.4% year on year, diesel demand at nearly 3.5%, and demand for aviation fuel was up nearly 13.5%. So we did well by increasing the penetration in the domestic market. We capitalized on the opportunities available in international markets, and had a very credible quarter, with the spread over Singapore complex increasing from $4 to $4.50 per barrel. In our petrochemicals business, behind the spectacular numbers and 82% EBITDA growth is both volume as well as margin expansion. We talked about higher volumes coming from all the projects that have got commissioned, particularly the off-gas cracker gave us higher volumes in the previous quarter. The ability to optimize feedstock linked to our ethane sourcing from the US gave us better margins in our cracking chain. Our polyester chain saw the best quarter in several years, and many of our products saw remarkable rebound in terms of their deltas. PET, with shortage in most Western markets, deltas are up 56% quarter on quarter. PTA is seeing tightness globally, and deltas are up 25% quarter on quarter. and so with butadiene, which also had a 28% tightness in deltas. So virtually all the projects that we have commissioned have come on stream at the right time when we are seeing strong domestic demand growth and we are seeing improving margins globally as markets tighten. In India, we saw polyester demand growth at 12% year on year, which is one of the best periods of growth. We saw polymer demand growth at over 10% year on year, which is also very encouraging. We are seeing this demand growth simply as a result of increasing consumption expenditure in India in terms of fabrics, textiles, packaging and all other such items. As far as our upstream business is concerned, EBITDA was higher than previous quarter, 488 versus 333 crores. Domestic production at nearly 18 BCF equivalent, down about 2.3%. Shale production at 24 BCF, down about 17%, and CBM production was steady. Retail business is truly a hyper growth business for us. We are seeing growth in store count, we are seeing growth in revenues, we are seeing growth in customer footfalls. We have unparalleled presence in retail and we are present through 8,500 plus stores, 8.6 million square feet of store space, 5.5 million square feet of warehouse space and a presence in over 5,200 cities and towns. In the last quarter, we saw over 100 million footfalls in our stores. We now have over 50 million members of the loyalty program at Reliance Retail. Our fashion and lifestyle vertical, which goes under the brand name of Reliance Trends, saw over 25 million walk-ins during the quarter. We opened over 800 stores in this quarter, which is definitely a global record in terms of physical expansion. Our online strategy through AGO continues to grow. Lot of customer traction there, 2.2 million app downloads during the quarter. And as far as international brands are concerned, we are by far the partner of choice for all leading international brands and have by far the largest portfolio. In terms of financials, turnover in this quarter of 25,890 crores, up 124% year on year and 7% quarter on quarter. EBITDA at 1,200 crores, up 3 times year on year and 11% quarter on quarter. And return on capital employed at nearly 28% in this quarter. And now finally, let me talk about Jio. Jio is the world's largest VoLTE network and it's growing at 20% every quarter. It is of course India's largest wireless data network. It has over 215 million subscribers and growing every quarter. In the last year, we added nearly 92 million subscribers onto our network. And in the last year and in the last quarter, we added nearly 28 million subscribers on our network. Both of these numbers are higher than all the other operators combined. We think that we have the highest customer engagement in the industry with about 5 hours of engagement every day on average. Our customers use 10.6 GB of data on average per month and we carry roughly 76% of all 4G data in the country. We have the highest voice consumption at about 744 minutes per month. We have the best network quality by far with a call drop rate of 0.13% and a download speed of 18.6 Mbps. And we have the lowest churn in the industry at 0.3%. All these put together and point to the fact that Jio is acknowledged as the leading data operator in the country with the best customer engagement. And this has also resulted in what we think is the industry leading ARPU at roughly 135 rupees per month. We have also now announced a monsoon hangama for the Jio phones with the intention of adding subscribers and taking that category of subscribers to 100 million soon. In terms of financials, Jio had a revenue of 9,567 crores in this quarter, up 13.8% quarter on quarter, EBITDA of 3,147 crores and net profit of 612 crores. As you can see, we have had a really exciting quarter. We have had growth across all our businesses. Petrochemicals, Jio and retail have been the three pillars on which we have seen most of the revenue and earnings growth. But on a consolidated basis, this again has been a record quarter. Thank you again for your time and see you again next quarter.